Venture capital fund. What is this venture capital fund? Venture capital fund means investment vehicle that manage funds for investors seeking to invest in startup firms with exceptional growth potential. So they know what is the firm that will grow. So they will invest in this firm so they can earn more. So this is the idea of venture capital. Venture capitalists generally, what do you mean? The finance new and rapidly growing companies. So they actually venture capital invest in new company. What is this new company? It's not available for sharing, public share, or it's not listed. So it has a good potential of listing. So when we become a partner or shareholder in it, in future we can sell it or push it for listing and earn money, or use this product and earn more income. That is what venture capitalists do. Purchase equity securities, they purchase them and assist in development of new products or services. So when they come to, they have many companies, they invested in many companies. From that company, they take the products like patent, rights, or any other useful thing and merge with the new company and create something. This is called venture capital. Add value to the company through active participation. They always in the company, likewise in the board of directors, or they employ employees of various companies to these companies to grow the company, such as the venture capital functions. The venture capital financing is a unique way of financing startup. They always focus on startup. The basic category of venture capital finances follows long-term horizon. Always, it's not short-term. It's from 3 years to 10 years period they work together. Characters lack of liquidity. That is not liquid. No, it's always in. They are usually private companies. They invest. It's not possible to liquidate fastly. High risk. It's working principle of high risk and high return. Always high risk and high return is there. Equity participation in the venture capitalists invest in forms of equity of the company. So they see what is this equity in that they invest and they get return out of it. Advantages. What are the advantages of this company? Advantages of bringing venture capital companies inject long-term equity values. So they are not like a debenture holder to get return. They want to sell the shares in a high rate or get the return using the shares. That's a motive. Say they will invest largely in equity. Second, venture capital is a business partnership by both risk and reward. So they, as they are not a debenture holders, they get more risk and they also get more reward. Venture capital is able to provide practical advice and assist in the company. And not only the investor, they help to grow you also. Venture capitalists also have a network of contacts that can add value to company. So they have various resources. They put in the resources to make your company value, and they also focus on their money there. Venture capitalists are capable of providing additional rounds of fund, not a single round of fund. If they want more, they'll put more fund. Venture capitalists experience in preparing company for initial public offering. Always their focus is to get the company to public offering. What do you mean? 10 crores minimum turnover plus 25 percentage margin for 3 years. This is the time they wait. When this has been achieved for last 3 years and no public default, any problem, they will go for listing and they list the shares in the place the shares in the market and they get the benefit, they reap the benefit out of it. They also facilitate trade sale. Always they also facilitate if someone interested in the share, they will sell the shares. This is what the basic venture capital fund basics.